Okay, let's suppose you wanna start growing up. You're of age. You want to start working, but you don't have a bank account, and you want to open a bank account. Well, if you already have a job with two pieces of ID, proof of address, you could go to any public bank in the states, or basically, well, in the state, you can't say all over the world because everybody's different. So anyway, talking about the states in America, two pieces of ID, proof of address, right? And if you hold a job, first thing you want to do, you want to open a savings account because that's the most important. That's what they're going to offer you, right? A savings account where you could put your money, save it, don't touch it. And as you want to open a checkings account, since you have a job, regardless full time, part time, as long as you get an income in, you could have a checkings account. Now, if you want to have a credit card, because you don't have, because in order to get credit score, because everybody's up to this, credit thing, you got to have credit to have a history of credit report that you're good paying credit. So they're going to test you. The bank is not going to give you a credit card right there and then, because you got to start from the bottom up to see how you are paying credit card, that you being responsible, that you could make payments. So what you do, you ask for a secure credit card. I don't know, the bank might tell you this, or if you know about it, you ask for it. Say, listen, I want to apply for a secure credit card. A secure credit card means you're going to put your own money into this account with the minimum of 500. You could put more than 500. You could put 1,000, 2,000, whatever, but you want to start at the minimum. You want to put 500 and a secure credit card, and that will be your credit card, and you're going to get rated the way you pay this credit card. As you pay every time full on time, your credit will go up. Now, you don't want to mess around and take advantage of this, even though it's your money, because that's why they call it a secure credit card. You put your own money to secure this card. Whatever you spend and you put back, it's your own money, it goes right back in. But if you spend it, you don't put it back, you don't get nothing back. And your credit is most likely is gonna affect you. So you just keep on paying this credit card, and as time goes by, your credit score is gonna climb up and up and up. And when the time comes, they're gonna send you a pre-approved credit. That means is you was pre-approved, you did good with your credit, that they approve you for a credit card that's not secure, that you don't need your credit, that the company that issued this card is gonna give you credit on your good responsibility. So that's what it is. So anyone that doesn't have credit could open a credit card with a secure credit card. So there's no need to worry about, I don't have no credit or things like that. You just go directly to your bank, wherever bank you want to use, two pieces ID, prove that you got income, and they will open an account for you. Another thing is that all banks are different, right? Most banks are gonna say, you don't got enough credit, this and that. But the thing is, you want to start your credit. So with this secure credit card, that's the way you're gonna bring up your credit. And once that's done, they're gonna pre-approve you for a credit card. They're gonna start you at the same limit as you open your secure card, where it may be $500, and that's the minimum you're gonna get to start, because they still gotta track your responsibility and how you're gonna pay this credit card and how long would it take you to default on this credit card. So you don't want to default. You want to keep your credit card going up. And with that, I'll let you go. We're gonna talk about now the difference between a credit union and the public banks offer you more flexibility when it comes, because the regular banks have ATMs basically all over. Some of them charge you a fee, some of them don't charge you no fee. So that's the difference between other banks and credit unions and private banks. We're going to get into that right after this. But I was just discussing the public banks, how they work, and who could get into it. Anybody that's averaging below, 250,000 below. If you got $250,000, I don't think you're gonna put it in a regular bank. It's up to you, but you gotta know about these things. Where you want to put your money, public bank, credit union, or private banking. They all have different, and they all have their own benefits and their downfalls. So with that, I let you go. We'll talk about the next banking system. Oh, before I go anywhere, I forgot to mention the pros and the cons of the public banks. The public bank charge you high interest rates on loans, on credit, and low interest rates on savings accounts. So on savings accounts, if you save money, you're not gonna earn nothing out of it. But your credit cards and loans, you're gonna pay higher interest rates. That's the downfall of these public banks. But other than that, the average person could walk into a public bank and open an account. It's as easy as that. 2 IDs, proof of income, and that's it. So before anybody brings that up, or who's gonna question that, I just brought it up. The interest rates are higher in loans and on credit cards, and the interest that they pay on your savings accounts are low. You don't make nothing out of saving your money in these public banks. So I just want to bring that up. And with that, I let you go to the next episode. Check you out. You gotta have a sense of humor, because else, you go crazy anyway. Remember, a secure credit card is your own money. You don't need to worry. If you spend it, it's your own money. As you pay it back, it's good for you, because your credit goes up. Now, as you default, you bring yourself down, and it's not gonna look good for you. So, be responsible, and things will work out for you. And with that, I let you go.